What's up, everyone, and welcome back to the channel where we dive deep into the tech stocks shaping our future. Today, we're unpacking a company that's been absolutely electrifying the AI space. A name you might not hear every day, but one that is quietly powering the entire artificial intelligence revolution. We're talking about CoreWeave, ticker symbol CRWV. This isn't just another tech company. It's the high-performance engine running under the hood of the world's most advanced AI models. Stick around, because by the end of this video, you will understand why CoreWeave is either the most brilliant infrastructure play for the next decade or a high-stakes gamble fueled by unprecedented hype. Let's get into it. So, what exactly is CoreWeave? Imagine the AI boom as a new gold rush. While everyone is talking about the companies digging for gold, the ones creating flashy AI applications, CoreWeave is the one selling the ultra-powerful shovels, pickaxes, and heavy machinery. In this case, that machinery is specialized cloud infrastructure built specifically for massive AI workloads. They provide access to thousands of high-end Nvidia GPUs, the very chips that are essential for training large language models and other complex AI systems. Companies like Microsoft and even Nvidia itself are not just partners. They are major backers. Why? Because building and maintaining these massive AI data centers is incredibly expensive and complex. CoreWeave has carved out a niche as the go-to provider for raw, unadulterated computing power on demand. They are the infrastructure backbone, the digital landlords renting out supercomputing power to the architects of our AI-driven future. Now let's talk numbers, because this is where the story gets really interesting. The demand for AI compute isn't just growing. It's exploding at an exponential rate. Every new AI model, every breakthrough requires more and more processing power. CoreWeave is perfectly positioned to capture this tidal wave of demand. We've seen their revenue projections surge, with some reports citing numbers soaring past $4 billion. This isn't just speculative growth. It's a direct reflection of the insatiable appetite for AI training and inference capabilities. When you see a chart of AI compute demand, it's practically a vertical line, and CoreWeave's revenue trajectory is mirroring that ascent. They are monetizing the very foundation of the AI industry, and they're doing it at a scale that few can match. This is what a pure play on AI infrastructure looks like, a direct bet on the continuation and acceleration of the AI. But before you rush to your brokerage account, we need to have a serious talk about volatility. If CoreWeave were a roller coaster, it would be the tallest, fastest one in the park with no seatbelts. This stock is not for the faint of heart. Looking at its trading history, you'll see wild, dramatic swings. We've seen it move from the low 30s to nearly $200 within a single year. That kind of movement represents incredible opportunity, but it also screams high risk. These aren't gentle waves. They are massive tsunamis of price action. This is a battleground for serious, high-conviction investors and traders who understand and can tolerate extreme volatility. If you're looking for a stable, slow, and steady dividend stock, this is not it. This is a high-voltage, high-stakes play on the bleeding edge of technology, and you need to be prepared for the turbulence that comes with it. So what's causing all this volatility? Well, part of it is the nature of a high-growth stock in a hyped-up sector. But a recent event really stirred the pot. CoreWeave's announcement of a massive debt financing deal, raising over $2 billion. Now, on the surface, taking on that much debt can look scary, and it certainly sent jitters through the market, contributing to some sharp price drops. But let's look deeper. This isn't just random debt. It's often structured as a convertible note, and more importantly, it's a war chest to fund a colossal expansion of their GPU fleet. This move signals that CoreWeave has such massive, confirmed future demand for its services that it needed billions in capital just to build out the capacity to meet it. In a way, this debt is a sign of strength. A signal that major clients have essentially prepaid or committed to future compute, locking in their access to CoreWeave's infrastructure. It's a bold, aggressive move to solidify their market position and get ahead of the demand curve. So, where does that leave us? Is CoreWeave the ultimate AI infrastructure bet for the next few years? A company poised to become the digital utility of the 21st century? Or is it a high-voltage gamble? A stock riding a wave of AI hype that could come crashing down? The bull case is clear. They are a pure play on the most fundamental need of the AI industrial computing power. With backing from giants like Nvidia and Microsoft, and with a clear strategy to expand aggressively, they are in a prime position to dominate their niche. The bear case centers on the immense risk, the sky-high volatility, and the question of whether this explosive growth is sustainable or just a symptom of a market bubble. This is a company that you absolutely need to have on your radar if you're really serious about investing in the future of artificial intelligence. As always, this is not financial advice, just an educational breakdown to get you thinking. I'd love to know your take. Is CoreWeave a buy? Or is the risk too high? Drop your thoughts in the comments below. And if you enjoyed this deep dive, make sure to hit that subscribe button and turn on notifications for more content. Thanks for watching.